Hello and welcome back to this channel. Amazing trading strategy that works using Bollinger Band. In this video, I'm going to introduce an amazing, simple, profitable trading strategy while using Bollinger Band indicator and explain why this strategy works. This strategy works because of the following reasons. The first one is you do not need to invest neither complicated software nor expensive indicator for this trading strategy, since Bollinger Band is actually available almost in all charting platforms and easy to use to get maximum profit. Second, the stock should be chosen from companies that are well being run with consistent earning. This kind of companies, the CEOs constantly working hard for years to upgrade the company's standard, and this kind of stock characteristics never appear overnight, and it takes years to form. That's why you must find this kind of stock, and I will show you how. Finally, number 3, this kind of stock, if it goes upward, it is more likely to continue going up higher. Remember, this doesn't mean the trend goes straight up all the time. No, it comes a time when the trend has a pullback and it comes below the mean and the stock price come undervalue, which actually lead to a profitable trading opportunity. This is where this trading strategy and Bollinger Band come into the play to buy low and capture profit as trend continue going up higher. Why we should use stocks with good standing? Let's take a look at available trading results of Russell 1000. Annual return is 13.6%. Winning rate is 56.31% for every trade. That's constitute for positive expectancy. Average profit is 32.16% for every trade. And average loss is 10.07% for every trade. Looking good. So that is the reason when the trend is going upward, there is a big possibility the trend continue going up higher and you make profit. The equity curve for nearly 20 years is also up more than 2,000%. These stocks grown so much during the past 20 years. So if you see the trend going upward at the end of a pullback, you can enter the trade and there is a big possibility the trend continue going higher and you make profit. Make sense? All right. Finally, I want to know how this strategy works. Number 1, use a stock with a good standing from S&P 500 or Russell 1000 or any other stock being well run with consistent earning and check its uptrend direction using SMA 200. These stocks could be Apple, Microsoft, Amazon, Tesla, Nvidia Corporation, or any other stock with this kind of characteristics. Number 2, install Bollinger Band using between 2 to 3 standard deviation to accommodate additional stretch for the pullback. This gives more power to push the trend go back to the mean when trend changes its direction. Same as elastic. If you stretch it more, it will have more power to push back to its original position. Number 3, find the pullback where the candle close outside the lower Bollinger Band and record its closing price. Number 4, place a limit buy order using 97% or 0.097 value of the prior candle's recorded closing price and place it before the next opening day of the market. And finally, number 5, exit when the 2-period RSI cross 50 or wait 10 trading days of the stock market, whichever comes first. Sometimes the 2-period RSI may not cross 50 and you have to terminate the trade manually and cut your losses short. Let's have an example to clarify the trading strategy. Example number 1. This is the price trend. First American Financial Corporation stock D1 time frame Yahoo Finance, which is a part of Russell 1000. In this strategy, I used the standard deviation 2.2. And also, as you see, the price is above the SMA 200, which indicate that this trend is going upward. Now, originally the price is coming down inside the Bollinger Band and reaching himself to the lower band and closes right here. And at this point, the price is $51.02 American. Now, in this strategy, we want to use buy limit order. So we multiply this amount by 0.97 and the number you get is a bit smaller than this. So we use that one as buy limit order, which is about $49.48 American. Now, as you see, we place our buy limit order here, but we have to remember that we have to place this buy limit order before the market open in the morning. So let's say the market open at 9 o'clock, you place it before 9 o'clock or the night before. Now, when the market opens, the price is going to go up a little bit here. And then after that, it's coming down all the way. And here, it reaches your order. And it passes your order. And your order is going to be filled. And the lowest price is going to be $48.969 American. So your order, you know that your order is already filled. So the next day you see the price is going upward. That's a bullish candle, and up and up and up again. But in this strategy, I'm going to show you how you exit the market. This is how you enter the market. And I'm going to show you in the next slide how you exit the market. Example number 1, continue. This is the same price trend FAF stock D1 time frame Yahoo Finance. And I installed the RSI with 2-day period. And this line shows the value of RSI, which is 50 here. Now, in previous slide, we had a buy limit order at this area with the amount of $49.49 US, and on RSI it shows here. And the next day, as you see, the next day the price went up. You see the price went up from here all the way and closes here. And on RSI the price went up and passed the 50% line, and you are here. So you tell yourself that this is the place that you have to exit the trade. But we have to, it's correct, but we have to wait for the next day to see what is the behavior of the market. And the next day you see that the candle opened way up the close price of the previous candle and went up. So we don't have to exit the market. And it closes here. And again, we don't exit. We wait for the next candle, for the next day, to see what is the behavior of the market. And you see the candle opened way above the close price of the previous candle. So we do the same thing until you see this situation. On the next day, the candle open here and coming down. So as soon as the price come down past the close price of the previous candle, then we exit the trade. And if you look at this situation that we exit here, and we are on overbought area, which is on RSI, it shows more than 90. So this is how we do it in this strategy. As I explained on my previous slide, we exit the trade when the RSI passed the 50% line, but we have to look at the behavior of the candle, or we wait for the next day to see what is the behavior of the market. And as you see, the price went up from 49 all the way to 58.37, and you see it here. From here, it went all the way to overbought area around this area, and you have a profit of $8.88 per share. So that's how this strategy works. And I'm going to show you another example to clarify this strategy better. Example number 2, this is the price trend, DV stock, D1 time frame, Yo Finance, which is a part of S&P 500. I installed the SMA 200 to check the direction of the trend. You see the trend is always above the 200 SMA, which means that this trend is going upward. And also I installed Bollinger Band with 2.5 standard deviation rather than 2 standard deviation to accommodate more pullback. The price is coming down toward the lower band and continue and approaching the lower band here and closes outside the lower band with $20.97 US. Now, in this strategy, we are going to use buy limit order to enter the market. Now, before the next opening day of the market, here, before the next day, we are going to use 3% lower than this price to put our buy limit order, and the buy limit order is going to be $20.63 US, which is about 34 cents lower than this price. Now, on the next opening day, when the market opens here, the price coming down and past the buy limit order and close, and the lowest price of that day is going to be $20.14, which it means it's past the buy limit order price, and our buy limit order is going to be filled. So this is how you place a trade, and we are going to check the next slide to see where we can exit the trade and make profit. Example number 2 continue. This is the price trend, DV stock, D1 time frame, Yo Finance. This is the same graph as the graph before. I install RSI with 2 days period. This line shows RSI at 50 value, and at this point on RSI shows 50. Now, this is This is the same place as we put our buy limit order, and the corresponding of this point on RSI is here, which is about 20 value of RSI. Now we have to wait for the price to go up and pass the 50% line, or here it goes up like this. Now this line show you that the price at this point, it crossed the 50% line, so you can exit the market if you wish, but you have to wait for the next candle, the next opening day, to see what is the behavior of the market. And you see the candle open here and go up, all the way up, and close above the close price of the prior candle. So you don't have to really exit the market. Wait for the next day here, and you see the price come down a little bit. You can exit the market here, or if you see the price go back and stay above the closing price of this, again you have to you can wait for the next day, and the next day you see the candle open way above the close price of this and went up and close here. So again you have to wait for the next day, and the next day you see the price is coming down. As soon as the price come down below the close price of this bullish candle, then you exit the market. And you see the corresponding point of this on RSI is here, which is on overbought area, and the value of RSI here is about 90. So you can make a very good profit. Now, another thing that I would like to mention here is, if you wait more than 10 days and RSI didn't pass the 50% line, don't wait. As soon as the 10 trading day, you wait 10 trading day and the RSI didn't pass this 50% line, you terminate your trade manually in order to cut your loss short. I wish you enjoyed this video and wish all of you a good luck. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.